Good morning, good afternoon, good evening, depending on where you are on the planet. And welcome to the Bull versus Bear meeting here with Trade Day for Thursday, the 5th of May. Steve Miley here on the call. Welcome, everyone. Apologies for the slight delay this morning. I'm still having a few issues in here. I don't think it's a general issue that you guys are experiencing, but when we open from the development side, in here from with the Tradeovate platform, we're having some problems opening it in Chrome. Now I have got it open in Safari, which means I'm going to have to switch sharing later on in the webinar. If I lose you at that point, my apologies, and we may have to not go through the charts again, but I'm hoping that because I can't actually share the whole screen in here, I need to share the window. So I'm sharing Chrome. Maybe I have to move over to Safari going forward. Anyhow, enough about my problems. Let's take a look at what we've got coming up. I'll come to the Fed shortly. Okay, obviously that's a key driver from yesterday. But let's take a look, first of all, what we had today. So we've had another central bank, three central banks in play, or of the major central banks, I should say. I think Bank of Norway was in play as well, but I'm not sure what's going on there, not really impacting what's going on with us. But we had the RBA, Reserve Bank of Australia, earlier this week, and as we know, they hiked rates more than anticipated. Yesterday, we had the Fed. And today we've had the Bank of England. Bank of England increased interest rates pretty much in line with expectations, up to 1%. So here we have article in here. Bank of England Monetary Policy Committee approved a 25 basis point increase by a majority of 6-3, taking the base rate up to 1%. The bank said the members in the minority preferred to increase rates by a half a percentage point to 1.25. So it wasn't that there were three abstaining; it was that there were the three were more hawkish. Okay, and on the back of that, actually, though, the pound has actually sold off 1.2% shortly after the rate decision in here. So we've seen the pound lower. So maybe not as hawkish as the market had previously expected. We've had a significant sell-off in the pound. Now, obviously, we've seen dollar strength across the board anyway because of the Fed. So the dollar's strong. It's up depending on where you look. I'm looking off screen here at the moment. I'm not sure if I can. Let me show you in here. Let me see if they've got it actually on Forex Live. I don't know if they've got live quotes here. Yeah, live quotes on Forex Live in here. So if we take a look where we are in the FX space, if this is going to update, hopefully, yeah. So the euro is down 0.5%, and this is obviously having had big moves yesterday in here. So euro down and dollar up in here. So these are corrective moves. Yesterday we saw a big sell-off in the dollar, and we're seeing a correction back the other way, similar to what we're seeing in stock at the moment as well. So the dollar has rebounded, having had big sell-offs yesterday. So if I just click into the euro versus the dollar chart in here, you'll see we had a big sell-off in here yesterday, and the market's recoiling some of that in here today. So yesterday was the story of yesterday was dollar weakness on the fact that the Fed was less hawkish, so de facto more dovish than anticipated. We'll talk about that shortly, but I just want to focus here. And the pound in here, you can see with most currencies are seeing dollar strength in here to the tune of about 0.5% in here. So we've got the euro, the yen, the Swiss franc, the Canadian dollar, Australian dollar, between 0.25% and 0.5% change in here versus the dollar strengthening. You see the pound is far weaker in here. So that weakness in the pound is because of a couple of things really. One, that maybe the central bank in here, the market was more aggressively bearish, but more aggressively hawkish. But also in here, they're seeing inflation hitting 10%. Now that's up on where the previous. I think we were previously looking in the 9% area. Currently, we're at 7% from the March data, the CPI data. Now expecting to roughly 10% this year. So then certainly a more but then overall, I guess, so that's negative for the economy, negative for the pound. But it does seem to be that we've seen, to some extent, maybe the market was looking for something a little bit more hawkish in here from the central bank, and they didn't get that. And I think that's a similar tone to what we got yesterday, right? So in here, rally sputters as futures slip on inflation fear. But yesterday, the Fed did deliver. If I go and find, okay, in here. So shares march higher after Fed and BOE hikes. Dollar regains traction, so dollar back up again, having sold off a big tumble yesterday for the dollar. Okay, shares make gains of relief at scale of Fed rate hikes. So the thing yesterday, there were two things for me. I think, or the main thing really was. Powell basically took the 75 basis point hike off the table, right? He said, they only raised 50, signals that 75 basis point moves are now unlikely. I'm just going to click through on that one to see what they've got here. But basically, he indicated that there was no need for that. And the market started to price in, some 75 basis point hikes coming. Okay. Powell's inflation battle will be unpleasant. Fed chief says bigger rate hike not in the cards. So basically ruling out the risk of a move up to 75 in here. So it set the targets fund rate now between 75 and 1. Now, unfortunately, for whatever reason in here, CME not doing a bit disappointing, but yeah, they've still got here at current target rate. So this is now for the June meeting, current target rate 25 to 50. So it's obviously 75 to 100 now. Okay. And then I don't know whether this is now saying 75 to 100 is priced in for only, so unchanged. And then 25, and then another 25. 25 is only 80% priced in, or whether we're expecting 0.5%. And then these are actually saying now these need to update as well. I'm not 100% sure. Target rate 75 to 100. Yeah. So I think these haven't updated down here. So I think this should actually say these should have had 50 added to them, as this should have 50 added to them up here. So this should actually say, so that's 125 to 150. Okay, so implying that this is a bigger rate hike, and then this is aiming for the 75 basis point rate hike. Even though Powell's basically told us that that's not going to happen. But anyway, Bank of England hike rates. Now, I did say on yesterday's call, just winding back, that I felt that we were kind of at peak hawkishness, that the market was kind of got very, very aggressive in what it was thinking about the Fed rate hikes going forward. I felt that there was a relief rally due for stocks because they've been under a lot of negative pressure. A lot of hawkishness have been priced in. And don't want to blow my own trumpet, but that's what happened really. The Fed came out and said, yeah, we're not that hawkish. Yes, we're going to carry on raising maybe 50 basis points. We're not don't see a need for 75. There is an issue with inflation. We're going to address the inflation. So I think the market took it quite well. It took, it knows the Fed's on track. Knows the Fed is engaged, but they're not going to become super hawkish. They're not going to start really super aggressively hiking rates. And stocks obviously like that. We saw stocks scream higher straight after that, and then even really on the news, stocks were slightly higher. But when we had the press conference and when Powell said basically took the 75s off the table, that's when we saw the significant rally. S&P and the Dow were up around 3% in here. Nasdaq, I think nearly 4% up. Now we have had markets parry gains this morning. It says rally splutters in here, but I mean it's not much of a splutter, I must say, considering how much we were up yesterday. We're down like 0.5% on the S&P, only just about 2/3% on the Nasdaq. Excuse me if you can hear the background noise, by the way, just something going on outside my house here. But we're having the market in here is hardly a splutter in my eyes, right? It's just a slight correction given the aggressiveness. The Dow was up 2.8% yesterday, and it's down 0.38. So net is still up, effectively 2.5%, from yesterday. It's still was still a very, very aggressive move. So I think this is this headline from Bloomberg in here: rally sputters as futures slip on inflation fear. That's just writing a story for the sake of it. So similar moves ahead. Now we have seen oil push back higher in here today. Two things obviously driving that higher. One, we've got OPEC coming up in here today. So there is an OPEC meeting going back to the calendar. So let's just run through the calendar. Actually, nothing really of significant note. Jobless claims in here this afternoon. We've obviously already had the Bank of England increasing interest rates in here. It is the OPEC meeting. We are expecting something later today from OPEC. And what are we expecting from OPEC in here? Well, OPEC Plus set to stick to modest oil output rises, okay, which is going to probably be a little bit disappointing for markets. So oil has been rallying it's up a little bit further in here today, not a huge amount, 0.5% up oil today, but the main driver previously in here over the last couple of days has been, where are we? So crude oil in here. Crude oil, Paris gains ahead of OPEC plus talks, okay. But the EU plans Russia ban, okay. So the EU preparing to say there's a ban on Russian crude over the next 6 months in here. So certainly in that case would be effectively it's a de facto kind of constraint on supply. If you're going to restrict where you can buy your oil from, it's going to then push the oil price higher. So that's certainly helped oil higher in here over the last 24 to 48 hours. But parrying gains in here at the moment, although saying that, you know, it says parry gains there. The future is slightly up on the day, but up but down from the highs. So yeah, oil still looking strong overall. What else do I have in here for you? So near European stocks playing catch up. You know, obviously European stocks were closed by the time the Fed came out, so European stocks up around 2% in here, 1.5% to 2% in here today, playing catch up with their US counterparts as they were closed pre-Fed last night. And we've already looked at this in here, so we had strong gains in here yesterday, and then the futures in here slipping slightly in here this morning. What else do I have? I've opened up for you in here. We've already spoken about that. Spoke about Fed. Okay, yeah, we've gone through all of this in here, and we've looked at those. Okay, and yeah, and a little disappointed. Now, guys, I'm going to try and switch across in here. Hopefully, it's not going to change. I'm going to in here. So I'm going to stop the screen share, and you should still be able to hear anyway. Is that still working okay? Yep, you can still hear me, I think. Now I'm going to try and reshare this screen here. Open the screen. So I'm hoping to share Safari with you now in here.